Yo, what's good, guys? Welcome back to the second episode of the Quarterly Theory Bootcamp. I do first of all want to say thank you guys so much for the support on the first episode. I'm glad that you guys did enjoy it. The feedback was very positive. So yeah, now I'm really looking forward to continuing the series and just banging out episode after episode after episode once or twice per week. So yeah, with that being said, buckle up, guys. Go grab something to eat. Make sure you've got pen and paper nearby. Make sure you're taking notes. And let's go ahead and jump straight into it. So second episode of the bootcamp. I want to do everything in chronological order. I want you guys to know each concept one by one, and then we'll tie it all together towards the end. So we learned about not the tropons, we're going to be doing that today. We learned about the time cycles and the quarters. So you guys now know when they are, what to look for in each quarter. And now today's episode is going to be about true opens, which essentially ties the quarters and the cycles all together as one. Basically, it filters out the low probability manipulation, the fake reversals, fake retracements, everything that you guys know a quarter can do. The true opens can filter that out. Okay, so first of all, as you guys can see, we've got a little spreadsheet here on the chart telling you guys the timings and the names of each of the true opens. So as always, starting with the quadrennial cycle, the 4-year cycle. It's lasting 4 years long. Each quarter is 1 year long. And also essentially the true open is always for every single cycle the Q2 open. So we have Q1, Q2, Q3, Q4. Ignore Q1. Well, don't ignore it, but the true open isn't in Q1. Wait for Q2 to open, and that very first candle of Q2 that prints, once that candle has closed, or even when it opens, sorry, you can just go ahead and mark out the open. So it's the open price of that first candle of Q2. Mark it out, draw out a line on your chart, or you can use one of my indicators to do that for you. And that is the true open, okay? So all these examples that we're going to go through here, every single one of them is just Q2's open, essentially. So quadrennial, as you guys know, comprised of 4 years. First year is Q1, second year is Q2. That second year that comes along, mark out the very first candle of Q2. Mark out that open, boom, that is your quadrennial open, so the true quadrennial open. And that will be the first month of each election year, because remember, like I said in the previous video, each election year is Q2 of the quadrennial cycle, and we view it on the monthly time frame. So that first monthly candle that prints of the election year, mark out the open, and that is your true quadrennial open. Now for the yearly cycle, viewed on the 1 week time frame, and this is what's known as the true year open, or the TYO. And this is the first week of April, because as you guys know, January, February, March, that is Q1. April, May, June is Q2. So the first week of April marks out Q2, the Q2 of that yearly cycle. So mark out that weekly candle open. That is your true year open. Quarterly cycle, again, there's no specific date or time for this because there's many quarterly cycles within each year, but essentially it is the second quarter of the cycle. That's the only way that I can tell you guys it, because there's not a set day that the true quarterly open is every single time. So yeah, just mark out the quarters, wait for Q2, mark out the open of Q2. Monthly cycle, however, is more mechanical. The true month open, viewed on the 4-hour time frame, the TMO. This is the second full week of the month, Sunday 1800. So what do I mean by second full week? So we have these things within quarterly theory known as distortion weeks, which is what we actually just had this week. And what it is the week will start within 1 month and then end within the following months, right? So this week that we just had started in September, I think it was like the 29th, and it's ending, or it has ended, within October, right? So that's what's known as a distortion week. So we ignore that week, that's like Q0, just a blank week essentially. And then the following week is our Q1, the week after is Q2. So this is why it has to be the second full week of the month, which there isn't many distortion weeks. I think there's one like every 13 weeks or so. So essentially, come into the month, wait for the first week to pass by. Once that second week opens up, it's the Sunday 1800 candle. So the very first 4-hour candle of that week, okay? Now the weekly cycle, viewed on the 1-hour time frame, is known as the true week open, the TWO, and this is at Monday 1800. But don't get confused, this isn't Monday's open, this is Tuesday's open. A lot of people get that confused because they see the Monday. Remember, every single daily candle opens up technically within the previous day, because that's when the Asia session is, right? So Monday's candle opens up at Sunday 1800, as you can see here for the true month open. But for our weekly cycle, is Q1 is Monday, Q2 is Tuesday. So the Tuesday open, which is essentially Monday 1800, the Asia session of Tuesday, mark out the open of that on the hourly. So the 1800 candle, Tuesday's open, mark out the open, and that is your true week open. Now for the daily cycle, viewed on the 15-minute time frame, is known as the true day open, or the TDO, sorry, not TDO. And this is just your classic midnight open, the 12 a.m. Candle on the 15-minute time frame, mark out that open. That is your true day open. Midnight open, that's what ICT teaches as well. However, he doesn't really teach any of the other ones, basically. This is why they come from quarterly theory. But that one is obviously from ICT himself. And then we go a little bit deeper here on the lower time frames, so the 5-minute time frame for the 90-minute cycle. These are what's known as the true session opens. And as you guys know, we have 4 sessions within a day. Asia session, London, New York AM, New York PM. So we've got 4 different true session opens for the day. So Asia one this is for the 90-minute cycle. So we know that Asia opens up at 6 p.m. So from 6 p.m. till 7:30 p.m. is Q1. And then 7:30 p.m. till 9 p.m. is Q2. So 7:30, the very first candle, that very first 5-minute candle of Q2, which begins at 7:30. That is our Q2 open. So that's what's known as the Asia True Session Open. Same with London. The Q2 open is at 1:30 a.m. Mark out that 5-minute 1:30 a.m. candle from the open of the body, not the close, not the wick, the open. Mark that out, draw out line. That's your True Session Open for London. New York AM is 7:30 a.m. New York PM is 1:30 p.m. And yeah, so then finally for the microcycle, we can't obviously say a specific time, or we'd have a massive list of every single true micro session open, which is viewed on the 1-minute time frame. True micro session open, like I just said, the TMSO. And again, the way I've just put this is second quarter of the cycle, because like I said, if I was to list every single true micro session open in a day, there'll be loads. There's like 30, 40 true micro session opens within a day. But yeah, I'm sure you guys can work that out. Like I said, make sure to apply one of the indicators to your chart. And then once you've got the indicator on your chart, it's very simple. If you're using the free one with the red box, just very first candle on the line of that red box, mark out the open. That's the true open for that cycle that you're viewing on the specific time frame. And then yeah, very simple. So now you guys know the namings and the timings of each of the true opens. And like, as long as you've got an indicator on your chart that shows you the quarters, you don't even need to like know the specific times or days of every one. Essentially all you do is just, like I said, Q2, very first candle, mark out the open. Boom, that's your true open for that cycle. So now let's go ahead and jump into a few more examples here of when and how to actually use the true opens. So here we go. We have an example right here, right? As you guys can see, this may seem pretty familiar. Accumulation, manipulation, distribution, right? So now let's imagine this price here. Each of these sort of phases of price, let's imagine this is 1 quarter right here, right? So let's imagine this is Q1, okay? Accumulation within Q1. Then we have manipulation here occurring within Q2, right? Like normal, like this is what we'd expect within a cycle, right? You know, some form of accumulation, then followed that by manipulation, and I've done that wrong. That's not the text. So yeah, that followed by then manipulation, and then we'd expect some form of distribution after, right? And ignore the drawings. I am not by any means a good drawer, or trading view drawer, I guess you could say. But yeah, I just kind of want to make this as simple as possible for you guys. Again, these are all messy. This is not obviously correct, but I just want to I want to see you guys picture this basically, right, within quarters as well. We are going to jump into some chart examples after this, of course, but this specific example. So accumulation, manipulation, and then distribution, right? This is what we expect normally, but when we bring the true opens into the equation, as you guys know, the true open is that very first candle of Q1. So it would be there essentially. So if we move this one up a little bit, as you can see, that line there, that very first candle that is on the line of Q2, mark out the open of that. Then when we're looking for our manipulation, we want to see price dropping below the true open if we are bullish, and pushing above the true open if we are bearish, right? That is the fundamental of a true open. Time-based premium and discount below the true open, longs above the true open, shorts, right? Obviously, we don't just immediately short when we're above it or immediately long when we're below it, but we can use the true opens to gauge when and why we should be taking a long or a short. So with the combination of the quarters, with the accumulation, expected manipulation after, we then form our true open for whatever cycle this is, daily cycle, whatever, it doesn't matter, it's all fractal. Once that true open's there, if we're bullish, we then want to see manipulation below the true open, so price dips below the true open, takes out the previous quarter low, which it doesn't have to for manipulation, but for the most part, it usually will, and we'll dive into that within a future bootcamp episode to know when and why it shouldn't. So it dips below the true open, ideally takes some form of liquidity, so in this case the previous quarter's low, some sell side liquidity, then we'd expect price to begin pushing back towards the true open, break above it to show that price is manipulated below it, and now it's actually managing to get back above it with that closure, solid closure above, as you can see right here. Then you'd expect price to begin that distribution phase and draw towards your higher time frame draw liquidity, essentially. So yeah, hopefully that does make sense. So wait for the true open to be established, wait for manipulation to occur above or below, and then you can trade after that the distribution. And also if we have a reversal after this distribution quarter, remember we're above the true open. So if we form a reversal above the true open, remember we want to be shorting above it ideally, then that is indeed valid as well. Another thing to note as well is as long as the manipulation has already occurred below or above the true open, like it should do, bullish one below, that doesn't then mean that you can't buy above the true open. It just means that you must at least see manipulation occur below the true open first, then you can look to buy above the true open after that, right? So you don't always need to be below. So if you miss this entry, it's not the end of the world. This is good. At least you've seen the manipulation below it, and then you can still look for longs above here, you know, here, maybe if you retest the true open, here, all the way towards the drawn liquidity, okay? So that's, again, something that a lot of people misunderstand. They think that you have to buy below the true open if you're bullish. You just have to see manipulation below it. It won't always happen, but if it doesn't happen, then you know that you're pretty much dealing with quite low probable conditions, essentially. So yeah, hopefully that does make sense, guys. Now what I'm going to introduce to you guys as well is another quality theory concept, but it's still on the same topic of true opens, and this is stacked true opens, right? And here's a little diagram here. Essentially what this is we have the current true open of the cycle that we're viewing. So imagine here, Q2, Q3, price action, right? Imagine this being the micro cycle, so the 1 minute time frame. Everything's normal, Q2, Q3, Q2, the beginning of Q2, that very first candle, remember, mark out the open. That is our true open for this specific cycle. In this case, the true micro session open, right? Draw that out. Then, let's say we're bullish, we then want to see one cycle above the cycle that we're viewing. So the micro cycle we're viewing here would then go one above, which is the true, no, it would be the true session open, but it'd be the 90-minute cycle. So micro cycle, one above is the 90-minute cycle, which is known as the true session open for the 90-minute cycle. Then what you want to go ahead and do is mark out the true session open for the 90-minute cycle. And if you see the cycle that you was viewing, so in this case, the true micro session open, true open being below the 90-minute one, or one above, whatever time frame you're viewing, like this, in the specific order as well, by the way. So the one you're viewing, and then one cycle higher must be above it. This is what's known as bullish stacked opens. And once price dips below both of the stacked opens, so below the 90-minute cycle and below the true micro session open one, then you'll find a very high probable setup, very high probability for a reversal to take place, okay? And then if we're looking for a bearish stacked open setup, it would be something like this. So let me draw an example. So we've got one true open there. Oops, if it lets me draw. And then we got another true open here, right? So now flip this around essentially. So the low time frame one must be above and the one cycle must be below. So imagine this is our true micro session open right there. We'd then go one cycle above and mark out that true open, so the true session open. And if we're bearish, we want to see the lower time frame one, the cycle that we're viewing essentially, be above the one cycle above, okay? And then you'd want to see something like this. Price come above, something like that, and then boom, okay? So you want to see that manipulation, as always, take place above the current true open that you're viewing if you're bearish, but then we're incorporating one cycle above true open for the stacked true opens, okay? And once we have stacked opens, we can then begin hunting for a very high probable reversal setup from there, okay? So yeah, again, also, you know, utilizing the quarters, what they should be doing: accumulation, manipulation, distribution, continuation, reversal, but just incorporating the true opens in play and making sure that we see price run above it, manipulate above it if we're bearish, or manipulate below it if we are bullish. Another thing to note as well is we don't need stacked opens like at all, but if they're there, then it makes it a lot higher probability. But you shouldn't rule out your setup just because it's not stacked opens, unless that is your model, of course. But if there is stacked opens, it will be much higher probability, okay? But the main thing is that you want to see is it manipulates above or below the current cycle's true open that you are viewing. So yeah, hopefully you guys found this little part here useful. Now, as always, let's go ahead and jump into a few chart examples of stacked opens and also just utilizing the true opens as they should be used. So I'll see you guys on the charts. All right, guys, so we are now in the charts for a few examples. As you can see, in this case, we are looking at ES. We're on the 1 hour time frame, which is viewed for which cycle? The weekly cycle is the correct answer. So yeah, as you can see, each of these quarters that are being marked out is from my own indicator, Oracle Insights QT Toolkit, link below in the description. As you can see, it is also marking out my true opens automatically for me. So this is what I was saying earlier. As you can see, as long as you've got an indicator that plots out the quarters, you can see Q2. This very first candle that is on the line of Q2 is where you mark your true open. So genuinely, literally just mark out the open of that candle, draw it out, use an indicator to mark it out for you. It doesn't really matter. And then remember, we're looking for price to drop below the true open if we're looking for bullish manipulation, and then trade above it, you know, whip above it for that bearish manipulation to then drop lower. So in this case of the weekly chart, as you can see, we have a X, we have a continuation of Q1. So you can see price trades outside of Q4's range, or in this case, Friday's range of the previous cycle. So last week's weekly cycle. So giving us that continuation for Monday, we then get accumulation. And as you can see, the true open is established and price is chopping up around it, right? So it's not, you know, it's wicking below it, it's wicking back above it. It's not clearly breaking above it just yet. So then after we can see that Q2 was that accumulation day, we'd then be coming into the following day looking for that manipulation, right? So Q2 doesn't really form any manipulation of significance. It kind of chops up, and also Q1 kind of expanded to the upside. So coming into Wednesday, looking for that manipulation. If we're bullish on the week, remember, the weekly cycle is tied to the weekly candle. So establish your weekly bias, then look for bullish weekly cycle manipulation in line with that below the true week open. So in this case, as you can see, price manipulates below Q2's low, Tuesday's low. So Wednesday manipulation, Q3 manipulation below the true week open. And then to confirm that, you can see price aggressively expands away, displaces away from that manipulation, strongly closing back above the true week open, okay? So then, of course, after this, coming into Q4 Thursday, looking for that distribution. And now Friday, either looking for a continuation or a reversal, as we are just at all-time highs. Price is broken above the previous day high, as you can see right there. So we are in for that continuation day on today, this Friday. So yeah, here's a great example of how you would utilize the true opens for the weekly cycle. And this is obviously fractal, so the same concept applies to every single cycle. Basically just adds that extra layer of confirmation. It is essentially just time-based premium discount. Okay, so let's say, for example, let's remove the indicator and say, for example, the true week open was here, right? Let's say the true week open was here. Price didn't manipulate below the true week open in this case. So then we wouldn't really count that as valid, quote unquote, manipulation, right? We usually always want to see the manipulation either above the true open if bearish, or below it if bullish, and it usually will always happen. The only times that you won't really see price trade below or above the true opens for that manipulation is during super expansive candles. So if you're, for example, on the weekly candle, experiencing a super bullish candle, price just opens up, just rips higher basically, you know. True week opens there, doesn't do anything, it doesn't drop below it, it just rips higher, higher, higher. So that's the only time when you can sort of expect price not to drop below that true open, but in most cases it will indeed drop below it. I mean, even what we can do here is on the indicator that we've got, is we can turn off the delete previous true opens, and we can even go back and just check out, you know, price is super reactive from the true opens. There are very specific points in price that price responds to, reacts from, and then drops lower. Because thinking about it logically, how a candle opens, right? You know, the first sort of period of that candle opening is more or less that accumulation. And then the second quarter of that candle is when you're looking for that manipulation. So that's why the true opens are where they are, instead of just being the candle open. Because the candle open doesn't really just open and just instantly manipulate. It'll usually take a little bit of time. So that's sort of like the concept behind the true opens of it being Q2, right? I mean, as you can see, last week's example, true week open established on Tuesday, price trades above it, manipulates above it. This was actually an SMT as well. You can't see on this chart here specifically because this was the one that created the failure swing. So manipulation above that true week open, followed by an aggressive displacement below it, confirming the manipulation is in for that weekly candle. And then that was followed by distribution and a continuation lower. Again, the week before, continuation, accumulation here in Q2, manipulation here during Q3, price trades below that true week open, aggressively breaks above it, and even retest it as well. So it is a very reactive level. So once price is already manipulated, you can still look for longs when price bounces back down below and retest it again right there, as you can see. And yeah, just super, super clear, man, like super clean. And that's just the past 3 weeks. That's not cherry picking examples. It literally is always there. True open, drop below, push higher. True open, in this case, so this is more of like a true open and then just expanding away from it aggressively, right? So not as good of an example there. But again here, true open on Q2, drops below in Q2, aggressively closes above, pushes higher, even retest it because we already had the manipulation occur over here. And then price can still retest it, you know, retrace, bounce off it, and then boom, back higher again. So super, super clean. Let me go ahead and show you guys one more example as well. This is on the 90-minute cycle, and this is literally from today. So Friday's price action, 3rd of October. New York AM session, right? 90-minute cycle of the New York AM session. What do we do? What is the New York AM session likely to do? Well, what did London do? Okay, cool. Now I know what AM is going to do, right? So then we utilized in the 90-minute cycle of the AM session and the true opens, the true session open of the AM, to look for that bullish manipulation below it, get into that move, and then trade it higher, right? In this case as well, this is a good example of stacked opens, which can be shown again on my indicator, link below in the description. True day, we have the true session below the true day open. So this is the specific order we need to see them for the bullish scenario of bullish stacked opens. So the lower time frame one below the higher time frame one. So then, you know, what did Q1 do? Continuation or reversal, whatever you would like to call that, below Q4's lows. It broke out below it. So therefore Q2, the following quarter, offered that tighter range, that accumulation phase. So then what we'll be expecting Q3 to do, drop below Q2's lows. As you can see, it does right here, manipulates below the lows, below those stacked opens. So we can be very, very confident a reversal is likely to occur. And then you can see price aggressively breaks above both true opens, not just one, both. And then from there, it kind of just leaves. It just pushes higher and higher and higher and higher. Q3 manipulation. And as you can see, Q3 manipulated and also gave a move higher, which is something that we will be diving into within a further bootcamp episode. But one thing to note is look how quickly the manipulation takes place within this quarter. That's why it has enough time to actually begin the real move, that distribution higher. And then Q4 can, you know, either be a distribution or a potential retracement as well. So yeah, with that being said, that is 2 very clear-cut examples of how you will be utilizing the true opens. Hopefully you guys did find this bootcamp episode useful. They are very, very powerful. Price can bounce away from them. It can manipulate below them, manipulate above them. It can filter out fake manipulation if there's not a true open. And we, for example, form what you may think is bearish manipulation, but we haven't actually traded above the true open for that specific cycle. That can be viewed as fake manipulation and actually be building up, generating liquidity on the highs to eventually actually manipulate above the true open, take out those built up highs before giving that move lower. So yeah, hopefully you guys did find this episode useful. I'd appreciate all support on this video. Leave a like, comment down below any other bootcamp episodes you would like to see from me. And yeah, with that being said, check out my socials, link below in the description, as well as my premium membership group, my one-to-one mentorship, both my quarterly theory indicators. Thank you guys so much for watching. Take care and good trading.